Hey guys, welcome back to Evolve or Die. Happy Friday. Today we're going to be talking about how I research companies and how I place a valuation on them and decide whether I want to invest in those companies or not. So let's just dive right in today. And the first step, the first phase of my research is going to be within just looking at the investor presentation. Most companies on their homepage, think of a typical webpage. You have your about, you have your information, you have research, you may have some case studies, careers. Most companies, like most web pages, also have an investor presentation section. So within that presentation, you're going to see a visual layout for the vision of the company. You're going to see what the founding team's vision is for the company and where do they see themselves in the future. You might see a little bit about their organizational structure and the makeup of the company. So that's where I begin first, the investor presentation. And this is also where you're going to find very specific plans for revenue growth. You might find very specific plans for future growth, forecasting, for expanded clientele in the future. You're going to find a lot of valuable information about the conditions of the company, what are their plans for the future, and you're going to find a lot of valuable information within those investor presentations. Here you'll probably find earnings as well, quarterly earnings, annual earnings. You'll probably find earnings per share within this presentation as well. And there's just a lot of great valuable information that is found within these investor presentations, and they're usually directly on that company's website. So that's where I start with the investor presentations. And the next step is to research their SEC 10K filings. So the 10K filings are required for all publicly traded companies annually, and they have to file this with the Security Exchanges Commission, the SEC. For those who are new to investing, the SEC is the regulatory force that keeps all the companies that are traded on the New York Stock Exchange in check, you can say. They have to report to the SEC. So it's like think of the SEC to companies as think of internal affairs for the FBI. That's kind of the best analogy I can think of. It's the regulatory agent that corporations, if they're publicly traded, they got to answer to the SEC. So the 10K filing that they file, like we talked about, is an annual report that all publicly traded companies have to file. And this is where you're going to find a good picture of a company's financial situation. So it can also potentially highlight risks that may be associated with the future of the company, investing in the company. And you can find 10K filings directly on the SEC website, but some companies do include the SEC filing within their investor presentations that they list on their website. But I haven't seen a lot of personal investor presentations with all of the outlined 10K filings. So some investor presentations might have them, some may not. And you're going to want to also understand the company's history. You're going to want to have an understanding of the founding team, and that kind of leads into my next step in researching a company. How did the team get started? Do they have a previous relationship before starting a company? If it's a startup, if it's a new company, this is actually one of the most important things that I personally look for. If it's not an already established company, I look really, really heavily and really closely at the founding team and the management because the number one reason that businesses fail is because they don't have a good team that works together. You might have a bunch of really, really smart people. You might have a lot of talented, bright individuals, but if you don't all collectively work well as a team behind one vision, behind the one singular vision of your CEO, the company, it usually goes under. So that's one of the things that I look for when researching a company, especially if it's a new company. You got to research the founding teams, have an understanding of their history, how they started, what are their plans for the future. So like we talked about, the SEC 10K filing is going to include a lot about the organizational structure of the company, equities and subsidiary holdings, and a lot of key financial indicators you will find in the 10K filing as well. You're going to find earnings per share, which is essentially just used to estimate the corporate value of a stock. And it's exactly what it sounds like. It tells you, the earnings per share tells you exactly how much money this company is generating per share of its stock. So that's exactly what it sounds like, earnings per share. It is a pretty good indicator for future revenue growth, and this in addition with understanding where their place is in the future. It helps a lot when trying to create that full picture, that full view scope of where is their place in the future? How profitable is this company going to be? So the 10K filings, like we talked about, you can find them on the SEC website. I'll leave a link down below so you can access through the Edgar terminals. And let's move on to my next step. We kind of already talked about it. The next step would be, researching the founding team. You got to understand where they came from, where are they going, do they have a history before the company? A lot of really, really successful venture capitalists, that's what they look for when they're researching to invest in a company. If they want to be a silent investor, a venture capitalist, equity investor, they look a lot, not so much at the idea. You can have, like I said, you can have a great idea, you can have a great vision and a great business model and a great plan, but if your team doesn't work well together, if your team doesn't have a history together, you probably are not going to be able to execute this vision. And that's not for everyone. That's not saying that you can't start a company with people that you don't know, but generally, most of the giants started companies with people that they knew, people that they had previous relationships with. Maybe they grew up together, maybe they ran across each other in similar classes, as in with the case of Facebook. Mark Zuckerberg was at Harvard, and Facebook literally kind of started as a class assignment / social experiment at Harvard. So that kind of sums up this particular step of understand the team. You're gonna want a good background. You're gonna want a good picture about how this team came about, what is the management style like, and things like that. It can give you a really good picture for its trajectory for the future, understanding where the founding team, established its origins. So that leads me into my next step into researching and analyzing, placing evaluation on a company, would be competitor analysis. So guys, you can find a great company, you can find the most revolutionary technology, you can have a vision for where the future is going, and that's how you know that this sector is, going to help propel society forward in the future. Having that insight. So once you find this great idea, this great company, this great technology, you gotta research the competitors. You gotta research who else is operating in this space. Do they have a competitive advantage? Do they have higher margins? Are they more profitable? Do they have more scalability? Do they have better distribution? You know, because it's like we talked about, you can have a great vision, you can have a great idea, but if you can't execute, if the company can't execute, can't generate revenue, can't manage its profits in regards to its operating cost, if this company has a lot of debt, you got to research your competitors, figure out what their competitive advantages are, figure out if the company that you were originally interested in is the company with the competitive advantage. I cannot stress this enough. Whenever I find valuable companies, I try to find as many companies as I can that are doing the same thing or have some kind of competitive advantage within that space. Or look for within the competition maybe reasons that they're not outperforming the company that you chose. Like, this is all going to be really invaluable when teaching yourself how to evaluate companies and teaching yourself how to find value. You got to find out what the competition is up to, because that's what we love about capitalism. Unfeathered, unchecked corporate monopolies like Amazon, for instance. I personally don't invest in any e-commerce that I feel like is in direct competition with Amazon. Why is that? Because Amazon is already a behemoth. Amazon is already scaled at unmatched levels. Amazon is already a dominating force in the e-commerce sector. Now, that's not to say there are other companies within the e-commerce sector that are not able to be competitive in an e-commerce space, like Etsy, for instance. Etsy is a really unique kind of digital marketplace, and they have a competitive advantage because they're in a very niche kind of market. Amazon, we know that Amazon sells everything. We know that I've never searched for anything on Amazon and it wasn't there ever, except maybe alcohol. Maybe they don't sell alcohol, but again, you can find another company with a competitive advantage, maybe that does sell alcohol, when Amazon will not and will deliver it to your house. Things like that. That's what I mean when I'm saying, like, seek out competitive advantages. Try to avoid companies that have, if they're a startup company, if they're a new emerging technology and they're in a very competitive space, I tend to stay away from them. And I still actively research, of course, companies that maybe I'm interested in, but maybe not interested in investing in quite yet. Maybe I want to see them generate some more revenue. Maybe I want to see them maybe refine their approaches to certain things before investing. So like we talked about with Etsy's in a very niche market, okay? But most of the other e-commerce, and most of the other retailers that have slowly transitioned into being e-commerce, they simply can't compete with Amazon. And that's coming back to understanding competitive analysis and being able to research competitors. You know, you might have found this great site that delivers, delivers children's toys right to your door. And okay, Amazon does that too, and they probably do it way faster, and they probably have way more options. So you really have to think about what companies are in the sector that are doing the same thing better, or doing something better that is, getting them more margin, or is going to have a more clear trajectory into the future. There's a lot that goes into researching the competitor. So that's kind of sums up researching competitive analysis. And my next personal step to researching is finding intrinsic value, guys. This is much easier said than done, because this really comes down to the way you think, the way you perceive the world, and if you have that insight that we talked about being able to synthesize everything that's going on around you, everything that's happening in the world at a legislative, at a global, at a political level, understanding everything, being able to synthesize it, and then make a prediction about where the future is going, and then having a vision of what the future looks like. So creating intrinsic value is, to me, it is figuring out, where is this company's place in the future? What value is this company going to bring society as a whole, as a company? And, I talked about in one of my previous videos, the sectors that we think are going to be propelling society forward, to the degree of Apple, Facebook, Amazon, Google, all of the current behemoths, all of the current pillars of society. There's going to be more. There's going to be the companies of tomorrow. And having that insight as to where they fit in the future is going to be invaluable. So finding intrinsic value, guys, that is, what is the company's future trajectory look like? What can this company do? What impact is this company going to have on a global and maybe universal scale in some sectors? Space tourism, for instance. That sector as a whole is going to be such a revolutionary industry, such a pillar of society in the future. So that intrinsic value you're creating, what does this company mean to society? What is this company going to do? How is this company going to fundamentally change everything that we know about our day-to-day existence? So creating intrinsic value, really, a large part of that is the way that you think and the way that you look at the world. Like I said, for me, it is personally seeing where the future is going. Where does the future lie? What sectors are going to propel society forward? And biotechnology within healthcare, we're going to see a crossroad of genome sequencing, gene editing, and artificial intelligence and machine learning merging in a way that we've never ever seen before, that the world has never experienced before. And another thing that helps me create intrinsic value, or helps me form an opinion about that, is, where is corporate America funneling their money? What are the richest people in the world obsessed with doing? What do they want to make happen that seems out of reach to the rest of us, that seems out of reach to the regular society? One of those things, exploring space. These people that are wealthier than God literally can put themselves on a spaceship and leave this earth if they so choose. And Jeff Bezos, Elon Musk, and Richard Branson are making it possible to fulfill the top 1%'s dreams and desires. If they want to hop on a spaceship, okay, let's make an entire sector around funneling money into space tourism. Let's propel space tourism forward. So again, that intrinsic value, where are the richest people funneling their money? What are they obsessed with? What do they want to do? They want to live forever. Rich people want to live forever. They're obsessed with immortality. Not all of them, but there's a good handful of giants that are obsessed with living forever, because there's a certain point, I believe, with a lot of really, really highly successful people, some of the smartest people that have ever walked this earth, I think that there hits a certain threshold where their accomplishments become almost like, I don't want to say a game, because that's not the right word. It almost becomes a competition against themselves of how many global problems at scale can they solve? How many issues can they fix? How many sectors can they completely transform, make more efficient? How many industries can they infiltrate and become a giant in? So at some point, it becomes a competition with themselves. And I think it's really important to pay really close attention to that, because a certain obsession forms. And that obsession is excellent for the economy. It's really good for retailers at times. It's really good for finding jobs, creating jobs within an economy, like Amazon. Amazon has created a lot of above minimum wage jobs, for instance, within society. However, there are other negative things that follow that obsession too, like swallowing smaller businesses just because they can. And Amazon's founding was so interesting because they had such an interesting way of forcing all of their competitors out of the market by having their prices so much lower than everyone else's, and being able to efficiently manage distribution so much more efficiently. They were able to literally box out so much competition, so they could become this e-commerce titan of industry. And so there's a lot of different thoughts that go into creating an intrinsic value. Like, what's their impact going to be? How far is their reach? How far is their reach going to go? And again, guys, another, figuring out where the intrinsic value comes from by following the money trail. It helps me to figure out, what do rich people want to do. And so many of them fund regenerative healthcare technology, regenerative therapy that can help combat the effects of aging. Biotechnology is going to be a sector that is propelling society forward. So guys, creating intrinsic value, it really comes down to a mindset and a perception and an idea of where the future is going. How do certain companies affect other sectors? How do they change our lives? How do they fundamentally change everything that we know to exist and everything that we're used to and comfortable with doing? So that pretty much sums up that step, guys. If you want to learn how to think more like a visionary, like a long-term investor, I am going to leave a link down below to one of my other videos that I posted about how I started researching investing and how my mindset helped me be very, very successful at finding value. And that's gonna lead me into my next step for researching and placing valuations on companies. And I apologize, guys, I'm really sick. I don't know if you can hear it in my voice or my sniffles, but I'm really sick today. I have an excruciating headache. So just bear with me. But my next step to researching and evaluating a company is going to be to figure out what are the driving forces of that market. So what do I mean by that? This can usually be found if you're looking for a great stock, if you find a great company, look at its historical movements, find the big movements, and figure out what caused that movement. What was happening that caused this movement? Was there an announcement from the Federal Reserve about inflation? Was there a war in Syria? Was there an earnings call? You know, a lot of the driving forces for companies, usually pretty stable companies, they're going to see large movements in either direction around the time of their earnings calls, naturally. If you outperform your shareholders' expectations, we generally see a rise in the price of your stock. If we see an underperformance based on the expectations of your shareholders, we'll probably see a decline. So it's really important to figure out what are the driving forces, what causes movements within this sector. Is it highly volatile? Does a tweet from Elon Musk send the stock into oblivion? Or, you know, is it pretty reliant on how the industry, how the sector is performing as a whole? So this is going to be really important when figuring out how long you want to invest in something as well. If you're just going to make it a swing trade, or if you're in it for the long haul, you may be able to sell off at certain times for better entry points. So you're really going to want to find the driving forces of the specific stock, the driving force of the market. So for instance, biotech companies do really well in the summer months often because there are a lot of different conferences that they have. So this sector is largely a seasonal, seasons are a driving force of this sector because of those conferences that they have. You know, they see a lot of research sharing, they see a lot of technology drafts, they see a lot of innovation at these conferences, and that makes investors really excited. That makes the public really excited about where healthcare technology is going. So there's a lot of things that affect the market. Everything affects the market. Let me just say that. Everything affects the market as a whole. But it's really going to be important to narrow down what sector your specific stock is in and what is a driving force of that stock. So growth stocks. Whenever there are fears of hyperinflation, growth stocks see a surge. Growth stocks see an increase. Why is that? Stability. People want stability and security and to mitigate risk. And within that sector, within those growth stocks, we're going to see an influx in commodity stocks. Commodity stocks are going to be your gas stations, they're going to be your grocery stores, they're going to be your energy providers in your region. The commodities, why? In hyperinflation, why do investors find themselves in growth stocks in commodity sectors? Because they are looking to hedge inflation. They are looking to offset risk. They are looking to transfer their money into a sector that no matter what is going to improve. It's going to make money. It's going to generate revenue. People are always going to have to go to the grocery store. Even if you don't go to the grocery store, you're still going to have to get your groceries delivered to you. Commodities for hyperinflation. So this is kind of what I mean when I'm trying to paint that picture of understanding the driving forces. There are so many things to research, and there are so many driving forces that cause reactionary responses in the market to whatever those driving forces are. So again, guys, whether it's earnings, whether it's expectations of inflation, whether it's a tweet, which is important to know. I try to stay away from the volatility for my long-term plays. I do a lot of swing trading where it is also good to know levels of volatility. And these are the indicators and these are the steps I take while researching long-term investments. I do look for a completely different set of indicators when I'm just doing a quick swing trade, when I'm just looking to scalp some quick profits. There's a completely different set of financial indicators that I look for. The volatility that we talked about, we're going to be looking for beta measures. We want to see those less than 1. We're going to see price to earnings ratios. We're going to want to look at volume. We're going to want to look at the order flows, the level 2 data. We're going to want to see the institutional buy-ins, the daily movements. So this video is really for a long-term approach. These are not how I evaluate how to make a swing trade or how to just find a company for a quick day trade. These are my long-term conviction plays and how I research them. So again, guys, so far we've gone through, find the 10K on the SEC website, look at the investor presentation, get a good idea about the founding team. You're going to want to understand the team. You're going to want to research the competition, see if your company has the competitive advantage, see if another company within that space has higher margins and why. We've talked about determining intrinsic value. We've talked about figuring out the driving forces of that market or of that company, what affects its movements, what affects the price movements, what affects the sentiment of the buyers that comprise this market. Is it one of the stocks that is primarily influxed by retail traders, and one research firm releases a negative article and we see a mass exodus out of the stock and we see the stock diminish by 35%. These are all very important things you're going to want to take into account. You need to know the driving forces of the market. And my last step, guys, is to find a good entry point. This comes with a lot of patience. When I find a company that I like, I usually don't just immediately buy in. I look at the performance, I figure out what the driving forces are. I might wait for an earnings call. I might wait for a CEO to make an announcement. I might wait for a seasonal trend that's associated with that particular company that's in that sector. I might wait for a trend to find a good entry point. So entry point is so important, and that's my last approach to finding good companies and investing in good companies. And remember, guys, none of this is financial advice. I'm not a financial advisor. I'm just somebody that likes to share information as I get it. But yeah, guys, thanks for tuning in. We are still reading The Wealth of Nations. It's an excellent read. Highly recommend for anyone that's interested in the philosophical elements that contribute to the movements in the market and the mechanisms that comprise the market. It's an excellent read. I highly recommend for anybody. And it's pretty easy to read as well. It is huge. It's a huge book, you can see here, but it's not an overly complicated book. It's well written in a way that's pretty easy to digest and easy to dissolve. But thanks for tuning in to the channel today, guys, and hearing me ramble on. I hope you guys have a great weekend. I'm going to have a due diligence dive for you guys into Planet Lab. Remember, that is the only position that I'm holding right now. I'm holding a SPAC DMY Group Technology 4. And this is the only SPAC that I'm holding at the moment, the only position I'm holding. So I'm going to have a due diligence dive for you guys about Planet Labs, the company that they're merging with, sometime this weekend. So you guys can have some info, some data about the company and where I see its place in the future. So thanks guys, keep evolving, and I'll see you guys sometime this weekend.